What time is it? It's time for some violent price predictions. And to be clear, we do not condone violence at ZipTrader, unless it's in the form of stock market violence. Be violent with your stocks, folks. And before we get to work, the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so first I want to give a quick update on your homework. So yesterday I asked you to do your due diligence on ticker symbol OZON. I told you to look at the niche that it's in. I told you to look at its competitors, told you to research the leadership, told you to do a deep dive into what this company is, what it has to offer, the proof of concept, what it's doing right now, and so on and so forth. And I told you to write those down, and if you were comfortable, to comment them. And let me just say, in the last 24 hours, I got a ton of great responses from you, and I've been very impressed. People always criticize stock YouTubers, and especially their audiences. They say, you're gambling, you're lazy, you're following YouTubers blindly. People watch YouTube videos without doing their due diligence. Smell like chicken. All the usual things that people say about stock YouTubers and stock YouTubers' audiences. And to see so many of you proving them wrong and actually doing your due diligence is really kind of a middle finger to those critics. And not only did you guys put the work in, but I know that a lot of you actually went and took a position on your own accord, and thus were already rewarded for putting in the work today. But that's besides the point. The whole idea of the exercise was to get you to do your own due diligence and to get you to actually think for yourself, and I know a lot of you participated in this in one way or the other, and I am going to be giving my own take on the potential for Ozon tomorrow. So make sure that you're staying tuned. Okay, so let's get to work. Let's start with PLTR. So Pltr, Palantir this morning announced that they will be deepening their partnership with BP. As we know, Palantir offers software that helps aggregate data and thus make operational decisions more efficient for large companies in many sectors. And the catalyst this morning was that Palantir software will be used with global deployment across the BP organization in a multi-year, multi-million-dollar deal. Part of BP's commitment to become a net zero company by 2050 or sooner. Now, this was a big deal for PLTR, not just because it is an extension of their already big contract with BP, but because an extension is essentially an endorsement of Palantir's products and how useful and valuable they actually are. You do not extend a contract for services that you didn't enjoy, and they've been partnered since 2014. But the big deal here, and I want to put this into focus, the big deal is they are helping BP become a zero emission and clean energy company. As you know, there's a huge social and governmental shift towards being clean, towards being zero emissions, to being sustainable. And Palantir's platforms can actually break down a company's operations and use that data, allow that company to use that data to help achieve these goals. And the success with tough clients like BP says a lot about the strength of Palantir's platforms. So when this catalyst dropped in the pre-market, I went ahead and I finally added a price target of $55 on PLTR. As you may recall, I have been a little bit of a shy salamander when it came to putting a price target on this play. We've discussed potential catalysts with this stock several times in the past. I talked about how I like them and how it was a good deal under 30 and blah, 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 blah. But I still shied away from giving a price target because I didn't really know how to value them. I wanted to see more proof of concept for what I was thinking first. Back in December, we talked about how PLTR is largely a partnership catalyst beast. You get a new partnership, it rallies massively. Then you get another partnership, it rallies massively. Settles down until the next catalyst where it then goes and rallies massively. And because you have frequent partnerships, that means you also have frequent catalysts. And that was true back then, and it's still true today. And from both a chart standpoint and a fundamental standpoint, I've been very happy with their slew of new partnerships. This, by almost every stretch of the imagination, is a growing and booming company that is likely going to get a lot more powerful partnerships as this year goes through. And we are only about a couple partnerships away from reaching this price target anyways. So I finally decided, when considering everything, that I'm going to go ahead and give this the price target of $55. And in terms of risk versus reward on when you want to buy in, I would say that you want to get this under $35. If you start paying a little bit more than that, you're getting into this area where, hey, wait a second, the risk versus reward doesn't make sense. So I say $35 and under is a good buying point. It is still trading below that, I believe. It's a little bit over that, but you'll get another opportunity to get below 35. Okay, so CCIV and the Lucid deal. Oh my God, I am so excited. We finally have an answer. After all this time and me making dozens of videos, we finally know conclusively if CCIV and Lucid are going to merge. And the answer is, we still don't know. But if I had $1 for every question of whether CCIV and Lucid were going to merge or when their date was to actually merge, then I would be able to buy Lucid and then compete with Tesla myself. We still don't know. They're still in merger talks. Though that didn't stop CCIV from running up another 15% today. It broke into new highs today. Fantastico. And it did have a deep dive a couple days back when an outlet broke the fact that there was no news for CCIV, which again wasn't new news because there wasn't news before then. This is the only stock where new news is that there's no news and then the stock tanks. But here's the most recent from what we heard from the company. Lucid CEO Peter Rawlinson went on CNBC today and declined to confirm nor deny speculation about the talks. Nothing new there. That's been going back and forth for weeks. But what I really like is what he said yesterday. He said, this is not about making an expensive car for wealthy people. He's talking about Lucid, of course. That's not why I'm here. That's not what drives me. I want us to be making 1 million cars a year. The ambition of Lucid is to have a profound effect. We are not a minority play. This echoes back what we said in January. Lucid isn't trying to be this luxury brand that only 5 or 10 people can afford. They want to be something that's a mainstream player like Tesla. They start from the top and they build down. They sell the most expensive ones first and then they push downward. Their goal and operational plan has always been to do that and to become a mainstream player. And that's one of the things that I like so much about Lucid. It's not trying to do a little niche thing. It's trying to expand into the entire market. And I'm holding strong that if CCIV gets the deal, this is going to go up to $70, $80. But if it doesn't, of course, CCIV could lose half of its value or even more because the floor is at $10. So there's a lot of downside here. CCIV would probably eventually just snap up another company and it might go back to $15, $20. But who really knows? So at the end of the day, you're kind of bidding on a pile of money with CCIV. A pile of money that may or may not be used to go and buy Lucid. But whatever company Lucid ends up merging with, that's going to be a big whopping deal. I think that it's more likely than not that CCIV and Lucid merge, but it's still a gamble play and I can't recommend you take that position. That's based on your risk management, how much capital you're allocating to sort of the higher speculative plays, and that's up to you, my friends. But I want to talk to you about the most requested ticker of the day, and the most requested ticker of the day is SBE, the company that's merging with ChargePoint. ChargePoint operates the largest online network of independently owned EV charging stations, operating in 14 countries, and of course it makes its own technology used in them. And SBE is an SPAC play, and with SPAC plays, they have two different catalysts. Number one, you have the original confirmation that a merger will happen, which we saw here. And then the second, we have the actual merger. Now, in the run up to the actual merger, you get a pre-anticipatory run, and that's something that we as traders like to trade off of. Doesn't always have to run, but a lot of times it tends to if it's a very high hyped stock. And with SBE, we got one of the most insane runs that we've had. And then we had some delays that caused this wavy price action. You got a delay, and then it started running up again towards merger, and then it got a delay, and then it started running up again. And then a little bit ago, as it started bottoming out, I started making the case for another pre-anticipatory run up to merger, because if it had ran up in anticipatory style before the other merger dates, then maybe it would do that again. Patterns tend to repeat themselves. They don't have to, but behavioral psychology is sort of a big thing in the stock market. That's how a lot of people make their career. But that hasn't happened yet. It's been mostly flat, and we have a merger vote on the 11th, which is coming up pretty quickly. It's very possible that we see another pre-anticipatory run, if not to the merger vote, then after the merger vote. In terms of a longer term outlook, I see this going like this. You have a potential pre-anticipatory run up to the SBE merger date, then you have a pop after the SBE merger date, and then it cools off. Almost always you see SPACs, they run up to merger, they pop, and then they cool off. And then maybe a month or two later, it starts settling down. It settles down here. That's when you want to snap it up if you like this as a long-term play. So I'm not somebody who would say, oh, if you want to hold ChargePoint long-term, to buy SBE right now and hold it. I would say if you're a trader and you want to trade the short-term, pre-anticipatory run, if you are trying to get a better longer-term 6-month, 7-month sort of price, I would get a better entry after the merger because you're going to get a discount. ChargePoint is already a very good company, but you're paying a lot for it at these prices. So make sure that you're either short-term trading this on a very short time scale up to the merger, or you're waiting to get a better deal post-merger. Anyways, folks, I hope that this answered all of your questions. If you have any other tickers you'd like me to cover at the end of tomorrow's video or whenever the next video is, it's probably going to be tomorrow because I'm a masochist, then go ahead and comment below. Also, on the same token of our charging stocks, our CLII play woke up a bit today. This is, of course, merging with EVGO, which is the leader in fast charging stations. Of course, ChargePoint is the leader in slower charging stations, but EVGO right now is the leader in the next generation of charging stations, so make sure to keep that on your radar as well. I think we all can agree that the charging station market is going to move more and more and more to charging technology that is faster. People like fast, people like convenient, and so something like EVGO is very, very useful. And while ChargePoint and the rest will catch up to EVGO, EVGO will be a big benefactor in the beginning, at least in my opinion. If you have any questions, feel free to reach out to us below as well, or join us on ZipTrader Circle if you're wondering what broker to trade these stocks on. We always like to send people over to Webull. They have pre-market and after-hours trading. What does that mean? Well, it means you could trade in the pre-market and the after-hours. A lot of people freak out. They're like, oh my God, why is all this movement happening in the times that the market's not open? Well, guess what? You can now trade in the pre-market and after hours. I mean, you've been able to trade in the pre-market and after hours for a while, but not if you're on some other brokers. Weeble's link will be below, and you get 2 free stocks if you sign up and deposit with the link. If you are looking to learn how to trade, would like our step-by-step ground-up lessons, would like our private chat that also includes our daily morning briefings, and of course our price targets and upgrades and downgrades and all that good stuff, well, go ahead and click the link below to learn more about ZipTrader U. Anyways, folks, have a great day, and I'll see you in the next video.